Thank you, ma'am. Good morning, everyone, and thank you for joining us on our Q1FY23 earnings call to discuss the operating and financial performance for the quarter. I hope you all had the opportunity to go through our results presentation, which provides details of our operational and financial performance. We have delivered a steady performance during the quarter across our organic as well as acquired businesses. On a standalone basis, we marked a steady growth of 15% on year-on-year basis. This was despite challenges due to a subdued demand environment and inflationary pressures. Our acquired businesses, Unitop, TriStar and Romac Chemicals too, delivered an improved performance in this quarter. Overall, on a consolidated basis, our total revenue from operations stood at 434.7 crores. In addition to our organic business verticals, we are seeing strong traction in the agrochemicals and oil and gas divisions. This segment is seeing healthy inquiries and leads from existing and new customer categories, and we remain confident of scaling up this segment going ahead. On the product front as well, we have been introducing several niches across businesses with focus towards sustainability. We continue to see multiple new business lines which are essentially centered around our four core chemistries of enzymes, silicones, acrylics and surfactants. This is currently a robust pipeline of innovative products coming up for FY 2023 across paints, water treatment and performance chemicals categories. We are also expanding the thin finish, technical textiles and textile sizing technology products in newer untapped markets. For the animal health and nutrition segment, we are augmenting our portfolio in the pet food area. Overall, we are seeing great traction and have received healthy consumer acceptance for all our new launches. Going forward, our endeavor remains towards introducing new products, strengthening our current offerings, and expanding presence across newer customer categories, thus broadening and deepening our market reach. With this, I would like to conclude my address and I now hand it over to Mr. Chari for his comments.
Namaste and good morning. Thank you, Mr. Edward. Despite a challenging operating environment, the new fiscal year has begun on a positive note. The demand and offtake in our HPPC, TSC and AHN divisions were stable, led by healthy client engagements. Our acquired companies, namely Unitop, TriStar and Romac Chemicals, also delivered strong growth during the quarter, which assisted our overall performance. On the profitability front, we delivered better margins during the quarter, backed by better pricing and lower input costs. On the segmental front, all our divisions, HPPC, TSC and AHN, delivered stable performance. Further steady growth in the export market aided overall growth. As Edward G mentioned, we have seeded multiple new business lines over the years with an emphasis towards environment friendliness. These product niches have been well appreciated by our customers, and we have seen this reflect in the growth of our overall customer base, which currently stands over 1,000 customers, encompassing multinational corporations as well as domestic and small businesses. Our core HPPC segment, which has a strong base of 200 plus customers, this customer category has marked a notable increase from just 4 brands in FY20 to close to 30 as of today. Our endeavor is to further enhance our leadership position in this segment and strengthen our foothold across various product categories. Overall, there is ample growth potential for all our business verticals and acquired businesses in both the domestic and international markets, and we are optimistic of tapping upon these opportunities going forward. In a stabilized environment, we look forward to delivering strong and sustainable growth across verticals. On that note, I would now request Ketanji to share his perspectives.
Good morning, everyone. Thank you, Chariji. Post the results and the business updates which both Edward G and Chariji has given you, I'll just quickly take you through what are the other key developments during the quarter. So this quarter we witnessed improvement on the profitability front. So as we had indicated over the last 2 quarters, we were working closely with our customers, taking some calibrated price increases. I think that was quite evident in the results for this quarter. Again, this quarter, along with an efficient working capital management and softening on the raw material prices front, has enabled us to restrict the impact of the inflationary pressures on our profitability margins to a large extent. Our gross margins grew by 246 bps and EBITDA grew by 136 bps quarter on quarter. So currently we are witnessing signs of tapering of key input prices as well as the stabilizing of the supply chains. We believe that on a normalized operating environment, along with our cost optimization initiatives, this should enable us to improve our overall margins going ahead. Our medium-term objective, as stated earlier, is to get back to our EBITDA margins of around 14 to 15%. We have been ensuring financial discipline while pursuing all our strategic growth initiatives. Going forward, we expect to report marked improvements in our overall return ratio profile as well. Overall, the company's financial position remains healthy, and given a normalized macroeconomic and RM situation, we expect to deliver strong growth across our business verticals over the next few years. Just another update for the quarter is during this quarter we changed the inventory valuation method from the earlier method of FIFO, that's first in first out, to weighted average method, that's the WAC method. WAC is the method which is followed across good chemical companies, and we thought it prudent to change it with this new accounting year coming in. There is no major impact in terms of the numbers in the financials, and that's what we reported in our notes to the quarterly accounts. I think that's all from my side. I will just now request Mansi to give you a brief on the financials for the quarter, and then we'll be happy to take questions from your side. Thank you.
Thank you, Ketan sir. Good morning, everyone. Let me provide you with a brief overview of the financial performance for the quarter ended June 30, 2022. During the quarter, we have delivered steady performance driven by improved demand and traction across businesses. On a consolidated basis, revenues came in at 434.7 crores as against 438.9 crores in Q4 FY22. On a standalone basis, revenues from operations stood at 233.73 crores as against 261.64 crores. Revenues from HPPC stood at 316.5 crores, contributing to 73% of revenue, followed by textile business at 93.9 crores, contributing to 21%, and AHN at 24.3 crores, contributing to 6% of total revenues. On the profitability front, EBITDA stood at 57.7 crores as against 52.3 crores in Q4 FY22. EBITDA margin stood at 13.3% as against 11.9% in Q4 FY22. PAT during the quarter stood at 28.7 crores as against 24.1 crores in Q4 FY22. On a standalone basis, EBITDA at rupees 27.1 crores as against 27.5 crores in Q4 FY22. EBITDA margin at 11.6% as against 10.5% in Q4 FY22. PAT stood at 15.4 crores as against 16.9 crores in Q4 FY22. Depreciation was higher at 15.3 crores owing to amortization of fair valuation on account of consolidation of subsidiaries. Interest cost during the quarter stood at 5.1 crores. Overall, we have delivered steady performance in the quarter. Overall financial health continues to be solid, and we look forward to delivering a stronger performance in the quarters ahead. On that note, I come to the end of our opening remarks and would request the moderator to open the forum for operational and strategic-led questions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sanjesh from ICICI Securities. Please go ahead.
Good morning, sir. Thanks for taking my call. A couple of questions from my side. First, on the standalone business, it's a third quarter of decline. I understand Q2 was on a higher base, but it continues to decline even in this quarter. And this quarter, it was led by all the three segments sequentially, HPPC, textile, and animal health and nutrition. Can you help us understand how are we seeing the growth in each of the sub-segment category within these three? And what is the segment which is most impacted, and how should one expect the growth in these three segments on a standalone basis going forward?
Yes, Sanjay ji, very good morning. This is Sunil Chari. I would like to highlight some things. The first is the raw material prices. The raw material prices continue to fall, and this means caution from our end and also customers' end. When the raw material prices are falling, we do not want to be caught up with inventory, and which may result in we selling at lower margins or even at loss. And the second is customers prefer to keep lesser stocks. So customers, instead of buying for a month, would buy for 10 days or 15 days. The second thing is the textile industry, especially the home textile, is facing some headwinds in growth because of stocks in the US markets. We are meeting customers and they feel that the next quarter should be better. And I think the major VPC year on year, the growth has been very, very good, even on the standalone basis. But we see 203 crores in the first quarter when the prices, there was no inflation. And compared to that, it is 233 crores. I'm talking only of standalone. Rossari now has grown to a bigger company, and the Unitop and Trastar revenues are also Rossari revenues. And if you see, the amount of growth which we have seen from last year is phenomenal. And we are happy with the amount of growth we have done, Sanjay ji.
No, in HPPC, can you explain or help us understand? I got your point that there is a destocking from the customer, but the end customer, that is more on the B2B category. I thought when it's a brand, they generally want to keep the inventory because they don't want customer to go. So I am not so surprised on textile, what you're telling, but it is on the HPPC side, it surprised me. We have not seen destocking kind of a commentary from many others on that category. Can you help us understand what's happening there on the HPPC category?
See, HPPC, I'll give you an example of a good brand where they decreased grammages 3 times in the last 2 months. 3 times. And then they increased the grammage also. They were fair to the customers. So there has been a lot of changes in grammages because everybody has margin pressure on our FMCG customers. So what we see, if you compare quarter 4 FY22 in standalone HPPC, it was 126 and it is 115. I think it is primarily pricing. So if you see one of our key raw materials is acetic acid, the prices were in the range of $1,800 to $2,000. The prices have fallen. Similarly, acetic acid, because every call we give you example of these two raw materials, it was around 60 rupees. It has come down to about 50 rupees. Similarly, butyl acrylate is one raw material which the prices have fallen substantially, and every week the prices are falling, or every fortnight the prices are falling. We are also very, very cautious in terms of not entering into segments or not buying raw materials. It is better to forgo sales rather than cut off sorry figure. What you will appreciate is something where we have been able to show higher amount of gross margins, higher amount of EBITDA. In the first quarter, we did spend about 2 crores on exhibitions. In Trastar, we spent 1 crore on phenoxypropanol REACH registrations. So this is also part of the seeding opportunities, because this 2 crore expenses in exhibition, we took part in about 8 exhibitions. two in USA, and many in here in the last few months. This would, of course, show our confidence that we are willing to invest and even willing to forego. Otherwise, you would have seen our EBITDA at 15% this quarter itself. But we did not stop on spending money on the growth path.
No, Sunil sir, I'm not talking about TriStar and Unitop. I completely appreciate the effort, and it is visible in the result. What I'm more is that it is HPPC category. Are we telling that what you said in the initial comment is contradict to what revenue growth we are showing? If grammage goes up, it's better for us, right? So that way we should have had a better revenue because we are more bothered about the volume than the pricing. And number two, the second thing is that is it fair to say that we are keeping lesser inventory and hence we are running stock out more frequently, hence we are foregoing revenue? Is that what you meant when you said that we are focusing more margin and we are foregoing some of the revenue? How to think about it?
No, Sanjay, what I meant is that there will be some raw material for a particular product. Abhi uska raw material mein if there is so much volatility, how do we take a call कि raw material खरीदने के नहीं खरीदने का? So we better not buy rather than cut a sorry figure. So in that sense, the volatility is so much. We prefer to be conservative. We prefer to be safe than be sorry.
So if I look at long term, how does this strategy work? If we go run out and we cut sorry figure with the customer, we tend to become less reliable, right? I get your point.
This is in new products, not in the regular products. I'm talking about anything which is new, anything which is seeded, anything which we see a growth potential, we see orders. And if the raw material prices are too much, and compared to coming to your earlier statement of grammages, it was 3 times reduction in grammage within 1 month. 3 times reduction in grammage. So reduction in grammage, of course, reduces the amount of business we do. And when there is too much changes, the whole supply chain, even at the customer end, disturbs because they have to key into our ERP, the distributors have to understand, the sales team have to understand. So there has been a lot of volatility, and I think you would appreciate, in spite of all this volatility, our profits, are, better.
No, profits completely appreciate. I was just trying to understand what is causing this decline, and just on the outlook, how should we see? It's fair to assume that in terms of sequential decline, it is behind, and going forward, this should improve for HPPC category on the standalone side?
So we are of course hoping for an improvement, but we see a similar kind of sales figures to be on the conservative side for the next quarter.
Got it. Can you give some more fair understanding on Unitop? What is driving such a strong growth in Unitop and TriStar? And between the two, which one is performing even more stronger for us? So can you help us understand what has been the year-on-year growth for Unitop and TriStar, and what is driving this strong growth for them?
So the first quarter of last year was not in our control, and they were not doing any quarterly accounting. We took over in August. In fact, the first payment is due this month, and 28th is the date of when we'll acquire 15% more shares of Unitop. Historically, I'm continuing. I'm completing your answer. Historically, the first quarter of every year, April to June is the biggest for agro because rains start in June and in North June end or July. So the first quarter is there, and similarly in the last quarter, the first quarter of this financial year, Unitop agro sales were very robust. So we had very, very good agro sales. Sales were surfacted to the agro customers. TriStar also had good sales. And we see better availability of ethylene oxide from this July onwards in both TriStar and Unitop.
So QOQ growth in the acquired company, particularly Unitop, is more of a seasonal phenomena, and improved yield is helping us further, right? Is that a fair understanding?
Yeah, and we see also the pressure on raw material prices going down in Unitop and Tristar. So going forward also we will see the amount of sales happening, the money total amount of sale happening. We would see that it will be steady or a little lower than in the last quarter because it was a historical quarter. So it was a very, very good quarter for us.
Just on the Unitop side, can you help us understand in terms of 4 quarters, how much does the Q1 contribute and how is the remaining 3 quarters contribute? Because I think having
don't have exact. Do you have exact figures of Unitop first quarter?
Unitop, Sanjay, first quarter we've done about 150 odd crores out of that 200 crores of revenue difference between standalone and console. So we expect this year Unitop to do at least 450 to 500 crores of turnover. So the balance we expect it to happen over the next 3 quarters. Of course, this quarter has been on the higher side, as Arvind said, because of the.
This quarter it is 1/3 and the 2/3 we will do over next 3 quarters.
Yes.
Got it. Just one question on the guidance. Last quarter we gave a guidance of 250 crores of EBITDA and 150 crores of PAT. Now considering Q1 margin bounce back, which looks like much better than what we anticipated in Q4, do we want to revisit our guidance? It looks like we can easily surpass this guidance.
So not yet, Sanjay. It's just the first quarter that we've had. Let's see another quarter or so because we are expecting Q2 to be on the similar lines and we are anticipating numbers to improve from H2. So currently I think we would stick to the earlier guidance and probably post quarter 2 we could relook at the numbers once again.
One last question to Edward sir. Edward sir, you made an opening remark telling that we are now seeding new products in new categories. Can you help us understand which are the new products, which are the new segment industries which we are looking for this?
Yeah, Sanjay ji. So what has happened is in the last 2 quarters or last 3 quarters, we've been working very closely with all the acquired companies and looking at what kind of synergies we can have. So in the last 3 quarters, we have been able to achieve a lot of joint development between Rossari, Unitop and Tristar. To give you some examples, we've been able to develop a lot of silicone oils in-house, both for textile application as well as in the agro application, where we've developed a certain kind of an ethoxylate which is now reacted with silicones to produce a super spreader. Then we have a new molecule in Tristar which we have developed jointly between Unitop and Tristar, that is the phenoxypropanol. Yeah, so phenoxypropanol, where we have invested another 1 crore for REACH registration. And in that bargain, we are also trying to expand our footprint in Europe for these new agro and preservative products. We've also introduced new esters like the SMOs and SML for internal consumption, which is produced at Rossari Biotech and then consumed at Unitop. With the help of Unitop and Tristar, we've developed the spin finishes, both the primary spin finishes as well as the secondary spin finishes for textiles. In the coating applications, with the help of Unitop's surfactants, we've been able to develop a lot of acrylic coating chemicals, and we've also developed a single pack polyurethane coating product for the technical textiles in coating. Apart from that, we've entered the sizing markets with both polyester sizes, which we had already developed, but we have developed a better range now of polyester-based sizing agents which go both in cotton and polyester. We've also developed acrylic-based sizing which have gone into polyester, and we are targeting the export market with that. In the animal health and nutrition, the esters and glycerides are at the final stage of testing, and they will be introduced shortly into the market, as well as we have now finalized the pet food introduction in the coming quarter for the animal health and nutrition business. The sustainable black dyeing process is picking up fast and is gaining traction in the marketplace. As well as we've also targeted certain green series of products. You would know our green acid, our green soda, our green hydro. Along with that, we are targeting a new product for exhaustion of dyes, as well as a new product for scouring based on enzymes, which will be a fusion chemistry between enzymes and chemicals. So these are some of the few examples where we have entered the market. In addition, we've also introduced a couple of silane-based binders which go into the paint market, which will help easy, stain release or easy cleaning of the paint and no attraction of static on the paint, so that there will be less dust extraction. So all in all, there are many other innovative products and ideas in the pipeline, but these were some examples of what we've done in the last 3 quarters along with our acquired companies.
Great lineup, Edward sir, and best of luck for the coming quarters. That's it from me.
Thank you. Thank you, sir.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Siddharth Purohit from InvesQ Investment Advisors Private Limited. Please go ahead.
Yeah. Hi, sir. So just wanted to know if, there has been some news of lower uptake by the textile industry in certain segment, particularly from the Northern American market. So are we seeing some sort of, pricing discount being asked by our customers from that point of, from that front? And overall, if you can say, obviously this year, because of the, softening prices, maybe realizations can come down a bit. So what is the targeted utilization that we see for all our plants, if you can say on that?
So the textile uptake in North American and even the European market because of the Ukraine war is subdued. So our customers are not able to use full utilizations. We're really customers. So as Rossari has been, we are trying to get in more customers. In fact, this quarter also we have got a very big major customer breakthrough, which is a new customer for us and a substantial customer in textile. So we are hopeful of having revenues which are in the range of 100 crores per quarter for the textile business even in this quarter. And in terms of profitability, we are focused on higher profitability, and textile business also has seen higher profitability. And the improvement in gross margins by more than 300 basis points is something which is very, very heartening. What we see also is addition of new products, which just Edward G spoke about. And these are new products which we are targeting into new customers and newer segments, be it sizing or be it spring finish, be it technical textiles, and also the finishing area, which is the strong point in the textile business in Rossari.
Okay. And on the overall utilization level that you expect for the company as a whole?
I think we are at similar levels as in the past. The utilization levels are healthy and good. We don't foresee any big issue, in utilization levels go down.
Okay. Thank you, sir. Yeah.
Thank you, Siddharthi.
Thank you. The next question is from the line of Abhishek Navakul from Nirmal Bang. Please go ahead.
Hey, hi. Thanks for taking my question, sir. Just one question from my side. Opening comments also we have mentioned about improved traction from agrochemicals and oil and gas, and also in terms of pipeline. We have taken names like paints, water treatment, and other segments. So basically, what is happening on the particularly home and personal care side, because that is the main part of our total HPPC business. And are you witnessing some sort of saturation in that particular segment as of now?
So, Abhishek, namaste. In the home personal care is the focus area for Rossari, and definitely there is no saturation. We see a lot of growth opportunities. We see possibilities of new product introductions, and we see possibilities of new customers. We have added new customers in HPPC in the last quarter, and we continue to add. I think we added more than 5-6 customers even in July. So we see we are not present. Even in a quarter of the customers in that sense by the number of customers. So the growth possibilities are humongous.
Okay, because actually we were anticipating, even if the price softening is very well understood, but apart from that, since we pick up in other segments like paints and water treatment, that will be an additional driver along with your home and personal care. And so basically what I'm trying to understand is this sequential decline that everyone is asking about, is it because of some sort of saturation in home and personal care for the time being, or it is purely because of the reasons which you stated?
No, what is happening is, for example, if you talk about the paint business, the butyl acrylate is one key raw material, and the butyl acrylate prices have been falling, every week. If you see just 15 days ago it was 140, it is now 120, and people are talking about 18 rupees now. And traditionally the paint business in monsoon is always the weakest. Monsoon and before the monsoon, and after September the paint business picks up. So we would see uptake. I think even in this quarter we are expecting higher sales to the paint industry than the last quarter. The HPPC business is exactly, you see 8% degrowth compared to the last quarter, but you see 10% growth over first quarter of the last year. In the standalone business. So the HPPC business, the home personal care business continues to be a focus and a good area for us to grow.
Sorry, sir. Actually, when I was asking about home and personal care, I understand your HPPC is actually contributing, so paints would have been doing well. When I'm saying home and personal care, I'm only referring to, let's say, detergents or cosmetics. So that particular segment I'm referring to.
I'm talking about home and personal care only. HPPC segment, so home personal care. Last quarter, the paint segment did not do well. It was not there, and volatility, we did not want also to step in that volatility. आज raw material खरीदा कल गिर गया, तो नया customer पकड़ने का meaning नहीं है ये type पे. So the home personal care is exactly what I'm talking about, where we added new customers in July.
Sure, sir. Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Jasmeet Wakia from Clockvine Capital. Please go ahead.
Good morning. Thanks for taking my question. So I'm guessing in the first quarter of FY22, there must be contribution of COVID-related sales of sanitizers, etc. Could you help us understand how that part of the portfolio has moved in HPPC on a YOY basis?
Good morning, Jasmeet ji. अभी सैनिटाइजर सेल सब लोग भूल गया, कोई हाथ में सैनिटाइजर लगाता ही नहीं है. So sanitizer sale is there. Only multinational companies, big companies are using it in their offices and warehouses. We have e-commerce companies who continue to insist on their employees using sanitizer when they come into their warehouse, especially the e-commerce companies. But otherwise, in the general public, we don't see any usage of sanitizer. हमारे ऑफिस में भी कोई आता तो कोई sanitizer हाथ नहीं लगाता है. So sanitizer sales. So this is the beauty of Rossari. 1.5 to 2 years ago, the company could change, was flexible, was agile, and the fungibility in the manufacturing process is something which we are very, very strong. And there is no sale of sanitizer, but we still have very healthy margins the last quarter.
But how is that? How the COVID-related sales moved on a YOY basis?
So it is a degrowth in sanitizer sales every quarter.
But but quantum काफी बड़ा होगा is what my guess is. So could you help us with the delta on a YOY basis?
I don't have the exact quantum of sanitizer sales because it's not a focus area for us at all now. But we continue to have sales. But it would be, 10% of sales of what we were doing earlier or less.
Got it, sir. Thank you, sir. That's all from me.
Thank you.
But just quickly, I want to add here, with a very big FMCG major, we have had increase in sales of disinfectants, products like Savlon counters, products like other disinfectant counters. We have had a good uptick in sales.
All right, sir. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Vijay Sarda from VL Finance. Please go ahead.
Yeah, hi sir. My question revolves around two strategic things. One, what we've been seeing, company is doing good in terms of the turnover and all that, but we have taken good hit on the margin from the top level that what we've seen in last so many quarters. So I just wanted to understand, given this volatility on the raw material, which was quite extreme this time, what is the steady state margin one can look for in next 2 to 3 years? And basically, as been reading through and been at, in the previous call, you said that the branded part of business is quite good, where at least you have a name in your product on the HPC and all that, where you have not been able to take price hike because that would have been detrimental to the overall story. So now, with this pricing of raw material going down, as you said, what is the steady state margin one can look for going forward?
Yeah, so if you see last few quarters, I think we've seen a steady improvement in the margins. Our discussion in the last 6 months with all of you was on this line that we'll slowly see improvement in the margin. I think that's what we've seen. Our percentage has improved this quarter. Our overall margin numbers have also kept improving quarter on quarter. Given the current situation, we've also said that second half is when we expect the margins to get a little more stabilized, and we will probably see an improvement coming through. Given the current situation, I think your question on steady state, our immediate medium-term target is to come back to our 14-15% kind of EBITDA margin. And on a longer term basis, I think we'll keep rejigging our product portfolio, and we aim to be 15% plus, 15 to 17% plus margins over the next year or two. That's what the internal targets are.
So the 20% plus margin that we have been doing was kind of one-off, or we will get to that level? I am not asking for the exact timeline, but eventually, given the product portfolio or positioning of the product, or basically, are we aspiring to go back to the level that what we have seen in the past over next 2-3 years? I'm not trying to get this will happen in next 2 quarters or 3 quarters, but overall, if I can say, given the mix and improvement in basically specialty and others, do we envisage that our margins will go to the previous highs or near to that in next 2-3 years?
So, as a company now, our focus would be on absolute amount of money we earn. We would not look at percentage of EBITDA. Secondly, our focus would be on asset turns. So as we have explained in calls before, if you have an asset turn of 5 and an EBITDA of say 13%, what has come now, and if we have an EBITDA of 25% and asset turn of 1, definitely asset turn of 5 and EBITDA of 13.
Yes.
So we would not focus on percentage EBITDA margins. As you see, and what Ketan sir told now, last quarter we were 53 crores EBITDA, we are 57 crores EBITDA. And if you see, compared to the previous, year, our EBITDA margins have, risen substantially higher. It was less than 30 crores in the first quarter of last year, So as a company, we have, practically doubled. So when we came from IPO, we had annual, EBITDA of 80 crores, and we are now talking about 250 crores annual EBITDA. So as a company, we are 50% up over Q1FY22 on EBITDA. So, we have the amount of money we earn, I think that is the most important rather than the percentage of EBITDA.
Correct. Got it, sir. Thanks a lot. Thank you very much.
Welcome.
Thank you. The next question is from the line of Ashish Upgalanwar from InvesQ Investment Advisors. Please go ahead.
Yeah, sorry to repeat the point on the margin, but I just wanted to understand the cycle from 2018, I suppose, till 2021. We had, in terms of percentage, maybe the gross margins were 10% higher than what they are today at the period before 2018. So is it because of this, the per ton margin or unit metric margin that we target and the price changes that happen on the product side because of the raw material side? I mean, is percentage margin not a metric that one should look for in case of Rossari? Because that's where I think the disconnect for us is happening. Hello.
I think it will be a little not really practical to compare 2018 prior with what's happening now. There has been, a key change in the way we have been doing business.
I'm talking only about the standalone bit, so I will leave out the acquisition for the time being.
I'm on the standalone. Even on the standalone business, if you see the way the business has grown, with the HPPC segment growing significantly in the last 2 to 3 years, and the raw material volatility that we have seen in the last year or so, I think it will be very difficult for us to compare these two time periods. Again, we really do not track the per ton kind of EBITDA margin. Again, given the fact, as I said, the HPPC which has grown has products which we sell in small milliliters packing to multi-ton tanker loads of products. So per ton is exactly not the right way of looking at it. As Chariji had said earlier that we are looking at how much margins we can earn on an absolute terms, thus improve our overall return ratios. Our assets, as we've always indicated, are fungible assets. So within the same asset, we can produce multiple products within the HPPC itself. So I think that would be a better way to look at the business rather than looking at it on a per ton basis. Again, the margins that we've earned over the last 6-8 months, 1 year, where if we were selling a product at 100 rupees and earning 15% margin, and we initiated price increases, the customers have asked us to maintain the same level of margin of 15 rupees even on a higher pricing base. So our percentages would have been down while our absolute numbers would have been intact. So that's how we have been taking this business forward. Maybe once the raw material situation improves over the next year or so, then probably we can have a better look at how we need to, rise and improve our margin percentages.
So, sir, the latter part of your answer actually makes it clear that basically for a certain quantity, you've been looking at absolute money, rupee margins or whatever, rather than percentages. That makes it clear that the percentage margins on the top line are not the way we do business, basically, right? I mean, it's mostly the EBITDA that you realize of the monetary terms. Is that correct? I mean, because I think you said in the last part of your answer the similar thing. So margins are actually an outcome on the percentage side, right? I mean,
correct. But now given the again now if you look at it on a consolidated basis, yes, we have acquired companies where certain, especially in the unit of front where agro is a major chunk of the business almost 60% plus sales of Unitop comes out of agro. And agro is something which we are keenly looking at growing over the next 2 to 5-year horizon. We've already started working on this growth story, talking to certain customers in Europe, in US to further augment the agro sales. I think with the agro sales going up at a complete consolidated level, you will also see an improvement in the absolute percentages going forward. But
so how much is agro right now? I mean, it would be a very small portion of the business, right?
It's about 60-65% of sales of Unitop.
Okay, Unitop. Okay. One more thing. I mean, so the base of last year in September 2021, I think we had very high sales then. So how does this quarter look like on that base? I'm talking about standalone only here. I think 330 plus crores top line, I think we had reported. So are we comfortable beating that in this coming quarter in September, or we are facing challenges on that also because RM prices will be softening maybe, and there might be realization issues there also?
So if you remember the second quarter of the last year, we had extraordinary sales, and in the earning calls of the second quarter, we had informed that it was an extraordinary. There was pipeline vacant, which we filled up. There was raw material not available with our competitors, and customers wanted material, and we supplied the material because we had a lot of raw material, that time, and this was a commentary which we had given that time also. And we had abnormal sales that quarter. That was abnormal. But we are hoping that the next quarter would be similar to this quarter, the first quarter of the current financial year.
Okay, so we will match up somewhere on the sales front.
Yes, it will be like the first quarter of the current year.
Yeah, because when we talk about an absolute revenue target and stuff that we have been hearing, so the margins, as you said, 14-15%, but then the top line becomes a bit challenging to understand on a quarter-on-quarter basis for you. So that's why my questions were there. Okay, thank you so much. Yeah.
Okay.
Thank you. Before we take the next question, reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Jasmeet Walia from Clockvine Capital. Please go ahead.
So thanks for taking my question again. So in your consol numbers, there is purchase of stock in trade of around 18 crores in this quarter. So I just wanted to understand what is this on account of? Do you buy finished goods from outside and just sell them without much value add in the company?
No. There will be some raw materials which we would have purchased from Unitop, but also what happens is, in terms of falling raw material scenario, we always look at if the price in the next month is going to fall, and if there is possibility for us to sell off the raw material, it makes sense to sell off the raw material at even no profit. Because if we keep it for the next month, we will incur losses. So these are something which we take advantage of the opportunities, and I think it is not substantial.
But this could work the other way around also. If, let's say, suddenly raw materials start going up, you will incur a loss as well.
Yeah, but it is a falling price scenario very, very clearly. If you see and track chemical prices and what we do, of course, our procurement department takes this call, but we are there and, we are looking at it on a day-to-day basis, and we take calls from the same.
Got it, sir. Thanks, sir. That's all.
Thank you. Participants who wishes to ask a question may press star and 1. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Yeah, thank you everyone. I hope we have been able to answer all your questions satisfactorily. Should you need any further clarifications or would like to know more about the company, please feel free to contact our team or CDR India. Thank you once again for taking the time to join us on this call, and good day to all of you.
Thank you. On behalf of Rossari Biotech Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.